Good morning, good afternoon, and good evening, everybody. Welcome to the Nest. Welcome back to the Nest in 2022. It's January 20th, 2022, and I'm Jim Chu in San Francisco, California. And we're streaming live on Stonks.com with entrepreneurs and investors from around the world. We're here today on the Nest to connect international investors worldwide with the most promising entrepreneurs from emerging markets, especially those in Africa. We stream live the third Thursday of every month, and all episodes are recorded and available on our website, untapped-global.com. And today, we welcome two very high-growth African startups to the Nest. They'll be pitching to a panel of seasoned investors from the US, Haiti, and the UK. Great. Now over to Michele and Julian, or Michele from Inspira Farms. And in full disclosure, I'm also an investor in this company. But it's just a testament to how incredible the founding team is and the current management team and what the problem they're tackling. Over to you.
Thank you. Thank you so much, Jim. And good morning, afternoon, and evening, everyone. Probably I'll just get to it as the 120 seconds started already. So I'll Michele Bruni, Inspira Farms, one of the co-founders and chief commercial officer, agroeconomist by training, and I think entrepreneur by nature, based in Italy, and a pleasure to be here. So at Inspira Farms, we develop and deliver cold chain assets for fresh produce in Africa, and we're here today to try and raise $600,000 of convertible notes. So there are massive problems for the sector that we serve in Africa. Infrastructure is virtually absent and very expensive. And without cold chain, the losses can be as high as 50%, generating very high emissions and a lot of missed market opportunities. So what does Inspira Farm do? Inspira Farms reduces losses while increasing shelf life with a lower than competition OPEX and providing our customers with access to data, and therefore increasing our customers' bottom line and generating impacts. Our drivers our drivers for growth are really based on market forces. And I think the three main ones are the increase of exports from Africa, the need for import replacements, and the consolidation of retailers in large cities. We have been growing our pipeline and our average deal size between 3 and 4 in 2021. And we have 100% of returning customers on the latest tech version. And at the moment, we're really trying to close a convertible round with an additional $600,000 to grow our sales and try to evolve the business model while preparing for a Series C in 2023. And I would stop there. Thank you.
Great. Perfect timing. Just about to cut you off. Thank you very much, Michele, for the presentation. Over to the investors.
I'll start. Thank you. Gosh, that went by so fast. I was like listening and I was like, wait, I want to know more. So Michele, Julian team, thank you for solving a really important problem. I'd like to say that first, right? I really appreciate the fact that you're solving a real problem that is important to not only the individual customers you serve, but the overall ecosystem. So I really appreciate that. And also, I took a quick look at your page, your web page, and I loved the fact that you also had a product configurator. Just the idea that, customers can really understand, potential customers can understand the different options and kind of pricing and really customize it to what they think their needs are before they would even talk to you, right? Now, assuming they have access to that, I just thought it was a really smart idea. I would love to hear more. So it sounds like you've got a great customer base, that is a repeat base. But tell me, the first time you have a customer what is their situation? Do they have these facilities? Are they upgrading the facilities? Are they growing kind of their land use, and so they need to add facilities? I would just love to understand kind of the first time a customer comes to you, that farmer, what does their infrastructure look like at that time?
I would probably start by saying that we have three key segments. Roughly 65% of the deals is represented by the core B2B, so let's say SME agribusinesses, and we see a fairly wide range within that segment. A lot of them are already connected to the market. They either lease or try and rent fairly old infrastructure. They have fairly inefficient technology, so they have some access to technology. They are somehow already linked to the market, so they already have volumes, assignment, buyers agreements, but they're really like trying to grow, and as well with some difficulties on the access to capex for investing in infrastructure that can be quite expensive. And so for them as well, one of our key thoughts is around making the assets affordable over the next number of years, trying to really make the assets repaid in a much longer period than what is needed to break even on that asset. And at the same time, as I was saying, building as many efficiency in the technology as possible to reduce their OPEX, and allowing them to have solid real-time data to control their throughputs, the quality of their product, reduce rejection, so have control on their business. Mitch, I don't know if you want to add anything.
Yeah, I think that's absolutely right. The other thing I'd add to that is, as we get down the layer and try and serve the smaller customers, that's when it gets even more interesting. And that's when you get into the customers who have got ramshackle, rubbishy cooling. And I've been out with these guys, and they may well have a cold room that's been put together by 10 different pieces that they can't service, doesn't actually do what they need. And I was out with a farmer just a few weeks ago that we've done 20 farms near Mount Kenya, and this guy's just blown away by what we've done. And the truth is, now we gave him a 25 square meter cold room. He worked his kind of butt off to kind of get that. This year, now he's got enough with us so we can finance him, and he's expanding with backpacks. So typically there is a bit of a journey on there. One of the challenges Michele and I are really trying to work on is, how do you get down into that smaller scale, right? That's really, really the question I want to get to, because that's where you can impact the loss rates once you get down there as well. For me, I actually think the work that Michele and Co have done on the technology is superb, right? We've got good tech, we can do the technology. Of course we make it better, but that's not the challenge. The challenge is the business model and the financing, and that's what we're kind of working through today. I have 2 customers today, and both those customers are blown away by the way we're starting to talk to them about kind of linking repayments to their output, which is just unusual in what is, frankly, actually quite a conservative environment. So, yeah.
Hey, can we guys, thank you so much. It's really fascinating. Can we just talk a little bit about business model, right? I'm looking at your website now. You seem to have lots of different strands. It looks like there's an asset financing piece, there's a cloud computing piece. Just talk us through the business model and where's your revenue coming from? And I also want to talk a little bit about the finance piece, because, well, the 2 bits, right? So one, is it kind of asset light, asset heavy? How do you finance? Where's the growth coming from? I'm just confused where you sit within. You're not a typical tech company. You're not a typical asset company either. You're not a bank, right? So in my head, I'm trying to pigeonhole you. Perhaps I shouldn't be pigeonholing you. I'm trying to understand how you fit in with all of this, right? And then what are the margins? Where are the margins? What's your growth? Look, lots of questions, but do you understand where I'm coming from, right? I'm confused, but I'm not that clever, so you got to help me out.
Mitch, do you want to go, or should I start? I would say most of the revenues really come from the deployment of the assets. Okay, so that is the major one. So we are selling on to customers, and then those sales can be either paid directly on commercial basis by the customers, or partially finance. And that is really to make the access to CapEx easier for the customer. Then the data and and other services like after sales services are really starting to generate more and more recurring revenues. And so, especially this year, we have specific objectives to try and ramp up those recurring revenues. We have as well done several pilots to try and shift more and more the business model towards an OPEX-based one. So we started, for example, linking the repayment of the unit with the payments that our customers receive from their off-takers, especially when they're overseas. And so we're going to concentrate really the next 3-4 months to try and validate what the pivot or what the next step in the business model can be to shift from probably selling those assets to try and have a much more OPEX-based model where it all becomes recurring revenues. And so shifting more from the beginning as a tech company, selling assets and doing projects, towards probably managing much more of those assets. And one of the key reasons why we can do that, because we learned how to do refrigeration, but we knew even from before what the problems of our customers were. We were coming as a background from being embedded in the type of supply chains and networks in which they operate. And so we know that in terms of advisory, in terms of solution, in terms of understanding how those assets needs to be operated, we have a very deep knowledge of that.
And so where do the assets sit? Whose balance sheet? Who's taking the risk on the assets and who's taking the risk on the financing?
At the moment, it's mainly us, right?
Okay. And how are you financing
on the finance? Yeah, the finance side, we have a finance partner that we work with at the moment. We're also trying to work with Untapped as well to get some smart assets.
Smart asset financing. Absolutely.
Yeah.
By the way, I'm an investor in Untapped, so I'm very happy.
See, Raj, how it all comes together, Raj. It all comes together right here on the show for us.
Yeah. We drove off a farm today, actually, after having seen this incredible little farm out in Nevada. And my first comments were like, we need to talk to Untapped. So yeah. I think that's the future, right, guys? And so we know how to design really good stuff. We know how to build really good stuff. The challenge for the industry often is how do you now finance it? So the finance is an enabling function for us. And that's where we can get really innovative. Maybe I didn't say a bit of my background. I just spent the last 5 years working in various kind of C-level positions in M-Copper. And so I'm quite used to this idea of what is M-Copper a solar company, or is it a bank, or is it a product company? And I kind of don't care. Like, what's the right system here that will work for our customers? And we do have like pretty wildly different customers, right? So our smallest unit is like 15 square meters. The biggest unit we've deployed is like 2,000 square meters, right? So we do have quite a lot of variability in there. The approach has to be different for each of those.
Hey, before I let Lauren, I just had one more question, which I suspect. Could you talk us through your numbers, please? How much have you raised before? What's your numbers? What's your revenue? What's your EBITDA positive? All that sort of stuff, margins, etc. Please.
I can be quite brief. Since we're being broadcasted, I will not disclose margins. But so far we've raised roughly 6 million euros. At the moment, we have a valuation pre-money of 13 million euros. Sales last year have been probably lower than expected at 1.5 million, with a growth of 20-25% over the previous year. And the plan for this year is to at least triple sales, plus, as I was mentioning, validating new business models with different type of clients, and ramping up the recurring revenue side, both on sales and services.
The one thing I just kind of put on that last one that Adam and Michele, who slightly underplayed some of the performance of last year, right, is COVID's a major factor for big CapEx type infrastructure investments. But the interest we had in Inspira farms last year was wild. So the previous year, the The value of the quotes we issued in 2020 was around about 15 million worth of value, right? Whatever. The value of quotes we issued in 2021 was 73 million. Wildly different. And there were some ambitious people in there. Some of those projects have come off, some they won't. So we have got long lead times. We will convert a whole chunk of that. So the expectations of 3xing sales in 2022 seems extremely reasonable to me.
Okay.
So, guys, first of all, congratulations. You guys are doing really good things, especially for emerging markets, and especially in Africa. You said you're working right now in 2 countries. In terms of that's concerned, are you which countries are those, and what targets do you have to ramp up in others? What are the competitors that you have in that space? And also, just give me, an idea, why you opened that company. What was the main driver?
I would start from the last one. Actually, your country has something to do as well with that. I was working with other colleagues in Latin America and the Caribbean, and we had a small investment fund. A lot of the investments that were made in post-harvest were not exactly what we expected. And so over a very, very long discussion, we said, but what if? And the following day, we resigned from that old occupations. So it was really out of experience from a different angle in working on post-harvest, mainly Latin America and the Caribbean. In terms of countries of operation, at the moment, we have 100 units deployed in 10 countries. We're about to hit the 11th in Africa. We're working in East, Western, and Southern Africa, with Kenya being the anchor market for Eastern, Zimbabwe for Southern, and West Africa just started this year, but with Ghana as a that is developing as an anchor market. And that is, the way we operate. There's countries like Kenya and Zimbabwe where we have a much stronger direct presence, and we're trying to expand, building partnerships on services, on delivery, on project management, with local companies that previously would have been considered competitors, while we're really trying to partner with them to make the market bigger. We play, as Raj as well was saying, type of different roles, and that enables us as well to put ourselves, in the not as competitors of the kind of small developers and installers or small and medium that you can find in countries, but as partners that would allow as well them to grow with a better commercial and technological offer.
Got it. And the competitors?
In terms of competitors, I would say the market is pretty fragmented. Besides South Africa, where the land holding is 1,000 times the average in Africa, so it's a completely different dimension. But in most other countries, we're talking about a number of fairly small companies that have a more or less fragmented supply chain. Then there is 2 or 3 bigger actors. In our segment, I would say, on our core segment, I would say that there's 2 or 3 companies, mainly from Europe, that we're competing with. I do believe that in terms of business model and technology, we are better. And so, part of the idea is to, keep gaining market shares. Then there's companies that do really kind of global contractors, global service, but that is, we just have a small overlapping of their smaller facilities with the largest that we do. And I believe we're becoming more competitive as well on that segment. I mean, I will be able to tell more over the next couple of months, hopefully. But to give an example, we just delivered 2 months ago a fairly small refrigerated airport terminal for a capital city in West Africa.
Great.
Hey, Michele, can I just jump in on? Sorry, can I just jump in on one point Michele made, right, which I think you should be shouting about, Michele? Hey, so one of our key competitors, we've just taken their director of sales has come across to us. The reason they came across to us was because they saw us as being he saw us as being massively more innovative, and just far more exciting about the way we're going about it and the way we're trying to get infrastructure onto the ground. So, yeah, that's good. Yeah, I feel like we've done some good work with one competitor. There's another one out there we'll continue to kind of battle out, but we are way more competitive. They don't have the data, they don't have the financing, and they're also based remotely. So I think, yeah, I'm feeling good on that front.
And key point for us is going to be Fruit Logistica Berlin, 5th to 7th of April this year. You're all welcome. There's going to be, a lot of fun as well at the booth. We are in the Africa stand, so please come and visit us if you're in Berlin.
Excellent.
I just
Can
have
you repeat
two.
the name of that conference again?
Fruit Logistica is the largest global trade show for fresh produce, where the trade happens, where the technology is displayed. So I think the year before COVID started, it was something like 375,000 people over 3 days, 8 hectares of fairground. So it's big.
And
Jim,
there's a couple of connections from the audience, and then we'll pass it back to additional questions, final questions, and then we'll wrap things up. We have a note from Riki Yamauchi. They're a VC based in Japan and have strong networks with large trading firms and conglomerates, and they also have the conglomerates have an interest in cold chains. So please get in touch with Riki after. I think that intro will happen automatic. Back over to you, Raj.
So just a couple of things I wanted to just get my head on. One is your customer acquisition strategy and your typical customer, and 2 is your burn rate. Those are the 2 things I just want to get my head around.
I'll just speak quickly on the customer acquisition. It depends a lot on the country. We have done massively well under COVID with content-based marketing over webinars, with really, really high attendance rates. We're talking about in over 6 webinars, we've reached over 4,000 individual participants. So really, really high participation. Social media marketing and optimization of SEO has brought in a lot of leads. Then in anchor markets, it's as well through referrals. A lot of agribusinesses share, the trade shows, the same input suppliers, the same advisors. And so, these being embedded in the network, and I'm talking specifically about Kenya and Zimbabwe, and having had satisfied customers has brought in as well some of the most important customers, the ones that in agriculture are the ones that others look up to or try to imitate, which is one of the things that we are most proud. So at the moment, out of for example, the 5 top exporters in Kenya, 3 of them are already our clients. So that speaks a bit on customer acquisition. We are going to go now. Fruit Logistica is going to be another very, very important milestone. And after that, we're going to resume more, social media-based marketing campaigns, especially because social media are giving a lot of freedom to farmers, especially in areas where they're not so close one another. And so there are many farmers are extremely active on social networks. Maybe I'll let you, Mitch, to speak about the burn rate.
Yeah, the burn rate, this obviously, this convertible note gives us considerable extra runway. I don't want to go into obviously all the details on this platform, which I'm happy to talk to you afterwards and give you all those details. But this will give us, I think it's an additional, way over 14 months for us to move on. So there's a lot of comfort once you've done that. Again, I felt very kind of comfortable with the fact that the 4 of our key investors reinvested in both myself and Michele as a management team. So yeah.
Well, great. Thank you very much, Michele and Julian, for your presentation and your answers and discussion. like to go back to the investors for last words, last thoughts. Would you invest? Lori?
Sure, I'll start. Our investment thesis isn't completely aligned with Inspira Farms, but having said that, what I love about this is, in my opinion, a very typical but impressive entrepreneurial story where you're not only innovating in the product and service, but in the business model. And I can't imagine having two better people to do that, Michele, with your sector experience, and Julian, with your business model experience, pay-as-you-go, smart asset, financing, revenue sharing, whatever it is. I think you guys are so well suited to continue on this success that I'm really optimistic and positive about what you're doing.
Thank you.
Thank you, Lori. Raj, what are your thoughts?
Yeah, so listen, first of all, again, I think I'd like to echo what you're doing is incredible. I think we need more companies like these to service what I would see as a very underserved part of the economy throughout Africa. I think to a certain extent that I have similar comments, Laurie, that we are kind of pre-seed to Series A investors in tech and tech-enabled. And I feel your business model is a bit too asset heavy for what we're doing. That may be unfair, but that's kind of the way I see it right now. I know the M-Copa story very well. In fact, the current CEO of M-Copa is a good friend of mine. Mayur Patel, I don't know whether you know Mayur or not, but he's a good guy. I think the experiences M-Copa has gone through, I think you probably have got the scars to bear as well as the fruits to show, perhaps. So I think that will stand you in very good stead. So I think that's great. Look, if there's any way I can help, my business partner, Vishal, is based in Nairobi. I'm happy to try and set up something to see whether we can help beyond just, giving you cash. But I think it's a no from me from an investment perspective.
Sarah.
Thank you, Raj. And over to you, Laurent.
Yeah, so basically, I have the same issue. We're investing mostly in tech and in Africa and the Caribbean, so it's a little bit outside of our thesis. But also happy to help, especially in Ghana, where in our other businesses we're very well established there. So and in many other countries in Africa. So so maybe we can start a cooperation that side, but on the investment side, we'll have to pass for now.
Excellent.
Thank you very much, Laurent.
Yeah, understood.
Go ahead, Julian, please.
No, just saying understood. Yeah.
Yeah, I think there's always a challenge, and I think this is great discussion around companies in Africa that are capex heavy or very much focused on building things and providing services with those things. I know in the VC world we're very much focused on asset-light, winner-take-all business models, but I would argue that so much of Africa will need to be fueled on new infrastructure.
Yeah, for sure.
Yeah, absolutely.
And I'm not trying to pitch Untapped again, but I think somebody needs to go after that market opportunity. So I think we're trying to.
And Jim, I think. Jim, I think you're absolutely right, and kind of I almost feel bad that I'm not doing investment in the space, because I think we're small checks, we're writing big checks. The guys with the big checks, the impact investors who say that they want to change the world, but perhaps you're the typical company that should be able to attract these impact investors who want to make an impact, triple bottom line, all that good story. So I don't think we certainly in our case are that your target investor, right? Your target investor is an impact investor who's really trying to look at it from a different lens, and someone who understands this supply chain issues that are massive across Africa and logistics and the whole agriculture space, which we don't have very much experience. So I think perhaps, unfortunately, we're the wrong angels for you, right? Not that you're not the right company, we're the wrong angels. That's all.
Yeah, and the comment on that is I think some of this is very much around the kind of investment model that investors are investing through. And so I think getting to the right investment models, getting to the investors with perhaps slightly different investment models than your typical VC investor, I think it will really be the trick. Well, thank you very much, Julian and Michele, for the presentations. And thank you for all the investors for your feedback. We're at the top of the hour today, and thanks to all of you guys for being here. Thanks to the audience as well. And please don't forget, we host this session every month on the third Thursday of every month. And we also have in-country events throughout Africa. Our next event will be in Cape Town, South Africa, where we'll be hosting investors from around the world in May. So if you're interested, please get in touch with us, or you can contact us through our website, untapped-global.com, or follow us on LinkedIn. And with that, thank you everybody for participating in the show today, and we hope to see you at the next Nest.